We're recording.
All right. Thank you, everybody, for joining us. We have a town hall meeting today presented by the San Mateo Area Chamber of Commerce. And our guest speaker is Enrico Hernandez. He's the CFO at Torre and Associates Insurance Services. And the topic today is how to track PPP expenses and maximize loan forgiveness. So if you've received your PPP loans, I'm sure you've been wondering how to track everything and make sure your loan is forgiven. So we're going to hand it over to Enrico. Everybody should be muted and you can put your questions in the chat box. So we'll do a Q&A after his presentation. Thank you very much. There you go.
Good afternoon, everyone. I hope everybody's cabin fever is at a manageable level today. It is a beautiful day outside, so at least it's not raining. Today I'm going to spend some time. If you notice, I've switched around the title of this presentation: Maximizing PPP Forgiveness and How to Track Expenses. So in case you're wondering why I did that, you'll see the method to my madness. And embedded in the presentation are a series of typically of the questions I'm seeing being asked. And if you've attempted to keep track of all the articles, and everybody's writing about this right now, and you're probably confused, and not only sometimes, in our regular jobs, it may feel like we're drinking from one fire hose. I'm saying nope, not drinking from one fire hose, drinking from 3 fire hoses. So what I'm trying to do today is help you manage through this process. Just want to caveat, this information changes hourly, and I'm not being facetious. This information, the legislation, the CARES Act legislation was put together so quickly that not all the I's were dotted and the T's were crossed, or is it the I's crossed and the I's dotted, whatever. Anyway, so, bear with the uncertainty. If you're a type of person who likes certainty, I know, speaking from personal experience, that it's been very, very difficult. We expect more information to come out as the forgiveness period. We're in the spending period right now, and as the forgiveness period gets closer and closer. So why don't we go ahead and start? So here's the agenda for today. I'm going to give a very brief overview of PPP and some of the questions that you may have. Hopefully your question is included here, or if you need more clarification, if you could go ahead and type your question into the chat box, and we'll try to get them to them at the end of the hour. And then also how to track PPP expenses. I mean, we can't forget about that, because if you track the expenses well and in an orderly fashion, it'll make your loan application, your loan forgiveness application, a lot easier. Okay, so why don't we just go ahead and dive in. The loan application is now available. You either your banks, or you can go online and get it, and it's quite extensive. I believe it's 11 pages. So, and there's a lot of reading, and I wouldn't recommend reading it at 10 o'clock right before bed, because it's going to raise your anxiety level. So, whatever is very relaxing to you, I would read the loan application when you're relaxed. Okay. Just a couple of things on the loan. The loans. We're well into our second funding cycle. And remember that you have a maximum forgiveness amount, all right? And I'm going to stress a word here. Those of you who have had SBA loans in the past, or in a prior life dealt with federal grants, you probably have heard the word allowable. And so I just want to set everything. There are going to be allowable expenses and unallowable expenses, and the allowable expenses are much, the list is much shorter than the unallowable. We're supposed to spend 75% of the monies that you get, okay, on payroll costs. Now, when this first came out, there was a lot of questions about, well, what constitutes a payroll cost? Do federal taxes, our portion of Social Security, Medicare, do those count? Does the ETT count from the state, or the unemployment? Do those count? Well, we didn't have a lot of direction, but now we have more direction. So, and I'll get into this. So we're supposed to spend 75% of our payroll cost of our loans on payroll costs, and then I'll go over those in a little bit, and then 24% on other allowable expenses. Okay, it's an 8-week covered period. Okay, there were a lot of questions as when does that start? When I signed the loan documents, when I submitted the application. Actually, it's when the money was deposited in your account. So circle that date on your calendar. That's your beginning date. Very, very, very key. Now, once that question was answered, it opened up a lot of other questions that hopefully I will get addressed in this presentation. One key thing here that I must stress: your forgiveness will be reduced if your FTEs are lower than the baseline period. Now, there was a lot of questions on what's an FTE, and I know on the application we got asked for head count, and we all know that head counts are not the same thing as FTEs, full-time equivalents. I'm going to answer that. Okay. The main point I want to make here is the intent of this program is to keep everyone on your payroll and to lessen the overall economic impact of the coronavirus. And the other thing that the intent of the program was to make sure that you didn't reduce wages. And I know wages and salaries, and I know in some instances, some businesses had to do that. Well, what the intent of the program was to not do that. And so forgiveness will be reduced if the wages are reduced 25% for any employee. And I put that in red because there is an exception, and I'll go into that for those who make over $100,000 a year. You want to maintain as much as possible your salary and wage levels. Any unforgiven amount is to be repaid over 2 years. So that's one of the benefits of this program and at a 1% interest rate. So I looked over a previous one of the first presentations I did way back. It seems way back in March that it was going to be higher. I think they came out with a 2%. Well, they lowered it to 1%, and you have the option to defer in the payments for 6 months from the date of the loan. Another thing on the loan, those of you who have been through formal financial statement audits, okay, and audits of internal controls, you'll know your auditors, if you've been through that you need to document expenses, and you always get asked for what we call in the accounting world, your source documents, okay? And those source documents in this case, because so much of the forgiveness depends on payroll, keep good payroll journals, okay? Now, if you have a payroll company, those companies have already, I know some of them have already adapted to the PPP format or framework, and QuickBooks also has really made some great, has really updated their software to help out with PPP. And then the other thing too, maybe and this may seem counterintuitive or ironic. Maybe your strategy isn't to maximize forgiveness. Maybe your strategy is to get liquidity or achieve liquidity at a low interest rate. I mean, face it, 1% is pretty low. And if you look at credit lines, they were higher. They were up in 3-4% before the pandemic. Now it's 1%. So it just you may want to say, well, really, I don't want to maximize the forgiveness. I want to have, I can't spend the money or whatever circumstances. So it's okay if your strategy is to have some liquidity after the 8-week covered period, then this is a way of doing it. Okay. So
Enrico, this is Pauline.
Mm-hmm.
So there is still a black stripe down the right-hand side, so it's cutting off your slide information.
Okay, so let me do this.
And we're thinking that maybe reduce your zoom. Okay, well, that's skinnier. It's better.
How's that?
That is shrinking it, yeah.
Okay. You know what? I don't need to look at. Let me see. Let me try one more thing. Bear with me. Bear with me. Bear with me. Bear with me. How's that?
Oh, we like that one.
Okay. All right. Okay. So, what are allowable PPP expenses? And this is the majority of them: payroll costs, salary, wages, tips, or similar compensation, capped at $100,000 annualized, or 15,384.62 or 62 cents. And there's the math. For That's the maximum that per employee that can be forgiven. Now, bear in mind that anyone who makes over $100,000, the forgiveness portion is capped at 15,384.62. Okay. So always keep this in mind. And the way we got to the 15,384.62 is you take 100,000 divided by 52 weeks in the year, divided by 8, which is the covered period. Okay. Another thing to remember, important thing, is the employer portion of group health care benefits. Now, very, very rare. Some companies still pay 100%. Some don't. Whatever portion you pay is what's forgivable of health, dental, vision. Okay. Employer portion of retirement benefits. If you contribute, if you're a not-for-profit, if you contribute to a 403B or a 401k for that matter, your portion, or when I say your, it's the employer portion of the retirement benefits, that's forgivable, or you can include that as an allowable cost under PPP. And this is causing a lot of confusion. Employer portion of state and local taxes. I'm assuming everyone here is in California. Okay, that's your unemployment insurance and your employment training tax. Okay, that's includable. What is not includable is the employer portion of Social Security and Medicare. Now, there are other programs that are in the pipeline to help us out in those areas. And you just need to make sure that you don't include your federal payroll taxes, Social Security, and Medicare in this calculation. Non-payroll costs that are includable, all right, not principal, let me repeat, not principal on your mortgages, but your payments on interest, okay, on your mortgages, both real and tangible personal property. Let me give you an example. Okay, so if you own your building and you have a mortgage, that interest on that is includable, okay? And you need to be looking at, it would be really good if you could get an amortization schedule from your lender to see how much interest you're paying in these 2 months. And that is includable as an allowable expense. Or if you're renting equipment, okay, let's say, for example, you're renting a truck, for example, and you're paying a car payment or whatever on that truck. That interest, just the interest, not the actual principal portion, is includable. Rent, okay, rent is includable, and that means, for example, if you're renting your office here in town, that is allowable. Also, rent on your copiers and your telephone systems, okay? If you have a lease, those expenses are includable. Utility payments, telephone, gas, water, and electricity are includable, okay? Those expenses are includable or allowable PPP expenses, okay? Allowable, forgivable, okay? We're not sure yet. Interest on pre-existing debt, all right? So we're going to stay tuned on that. There's been a question about interest on pre-existing debt, if it's allowable, but not forgivable. So allowable and forgivable are two different things, okay? So anyway, we shall see. We're asking for clarifications from the federal government on this. There was another part of the legislation, and this is one of those things that has changed. I think the original legislation said incurred and paid, and that caused a lot of consternation because incurred and paid. Does that mean I have to incur the costs in the 8 weeks, and then I have to pay the costs in the 8 weeks? That's going down the road of accrual and cash accounting, or what's includable. You can now include, okay, that should be borrower, sorry for that. You can include expenses that have been accrued but not yet paid. The best example for that is utilities, right? You don't get your utility bill for March until April. Okay, now wait a minute, that's incurred in March. Is it allowable in April? Well, we got clarification. You can include, for example, your March utility payment, your March utility charges that you paid in April are allowable. Okay, they're includable. However, it gets really, really sticky. You probably had sleepless nights over this. On, well, how do I line up my payroll? So for example, remember that the loan kicks in, or the loan period, covered period, starts the day you receive the funds in your account, okay? However, what happens if that doesn't exactly match with your payroll? And there was a lot of consternation, and people were thinking, oh, do I have to carve out 4 days and to make it line up, and then do all these things? Well, what the government has done is has given us what's called an alternative covered period, but it's caused some extra consternation that I call, and some of the pundits call, a loophole. So let's say you pay monthly. Okay, now in California, this is hard to do because of wage laws. Okay, and if you have to pay by the 26th in California if you're paying monthly. But if you have non-exempt employees and exempt employees, it gets really difficult. But we're not going to go down that road right now. But we're just going to say, let's say you receive your funds on the 26th of April. And your 8-week covered period starts on the 26th and ends on the 22nd, okay, of June. That's 8 weeks. And you have payrolls on 4/30 and 5/31. Well, there was a question then, do I only include 4 days since I got my funds on the 26th, and there's on the 4/30 payroll, and so forth. So what happens is you can include, if you are a monthly or semi-monthly payer, you can include all your payroll. You can include all your payroll paid on 4/30 and the one on 5/31. Okay, so you're probably thinking, wait a minute, there's from 4/1 to 4/26 in that, whatever, okay, in that pay period. So wow, I can include that? Yes. And then you go on the back end, or from the period for 6/1 to 6/22, it also counts in the covered period, and that works for semi-monthlies if you pay on the 15th and the 31st or the 30th, depending on the month. So you're probably saying, Rico, are you saying that I can get 9 months, or 9 weeks almost, in this 8-week period? Yes, it's a loophole that we don't know if it's going to get closed. But as the documents are written, as the guidance is written, that's a loophole. They may catch on to it before the end, and they may close this loophole, but it's there. Okay. For those who are weekly and bi-weekly payers, okay, let's say you're now offered an alternative covered period. Let's say the borrower received the money on 4/26, payroll starts on 5/1, or the new payroll period. You may delay your covered period on payroll only to 5/1. Okay, this is not for the monthly or the semi-monthly payers. This is just for those ones who are weekly or bi-weekly. Okay, so you have an alternative covered period. All right. And I know, there's only so much you can do in an hour, and your head is about to explode. I'm with you. Okay. I'll try to answer as many questions at the end of the session. Okay. Forgiveness math, okay? 75% or more of the loan proceeds, it's intended to be used for payroll costs, and I just told you what those were about, and up to 25 may be used for non-payroll. Okay. Now, there were questions in the current interpretation, and I have to check on this, is that the 75% rule applies to both the amount spent in the 8-week period, which is coverable, and for the remaining unforgiven funds after you got your forgiveness amount. So I have to check up on this just to make sure. So, right now, the more conservative thing to do is to assume the rules apply during the covered period and the non-covered period. Forgiveness amount will be reduced, okay, in 2 cases, all right? If there is a reduction in any employee's average salary greater than 20% during the 8-week period as compared to Q1 2020, and if you reduce FTE, okay, and this is additive. The best thing to do, if you can do it, is to make sure you don't reduce anyone's salary more than 25%, and the second thing is that you don't reduce your FTE. Now, I'm going to give an answer. You probably went, Enrico, what's the FTE? What's the FTE? What's the definition of FTE? I'm going to get to that in a minute. Okay, and this is additive. Now, I just want to say, when you do the math on this, okay, be very, very careful when you do the math, and you're going to see, okay, the effect that this has on forgiveness. Bear in mind, you can undo what you did, what we call a safe harbor, or if any of you play golf, a mulligan, if you bring people back by 6:30. And there's my mulligan language. If you've laid off employees between 2/15/20 and 4/26, if you rehire them by 6:30, or if you reduce salaries between that same time period and you restore them by 6:30, you will not be penalized. Okay, so there's a little grace period there, or safe harbor period. Okay. There was a lot of consternation over this, and we can thank, I think it's safe to say there's nobody from LA here, and if you're an LA Laker fan, excuse me, that was a Freudian slip. If you're an LA Laker fan, you may not like what I'm about to say. This was brought about because the LA Lakers and some other firms like Shake Shack and Ruth Chris, these public entities, okay, were getting money, and they were literally shamed into giving the money back. Well, last week at 11:09 on the 13th of May, if my memory serves me correctly, there came guidance and basically said there's a safe harbor for borrowers who borrowed under 2 million. So so you got a safe harbor, okay? Just don't commit any fraud, all right? For borrowers over 2 million, you may be audited. You may be asked to return the funds if they determine that you didn't need them, okay? And they wanted the funds back by the 18th, but now that date has passed. What I recommend, if you're in the second bullet category, if you have received over $2 million, just make sure you document the thought process you went through to justify getting the loan. For example, we only have, and do the calculation, 2 months of operating reserves, okay, which is the 8-week period. Or I don't have any operating reserves, okay, that's even better, okay? And if you can, do a cash flow forecast, okay, to back up your assertions, okay? Now, they may not audit you. They may audit you. It's like the IRS. Each year, you never know if you're going to get audited or not. In the presentation I heard about 2 weeks ago, there are only 99 auditors for the whole country. Okay, so you can take that as a data point and go with that. Okay. FAQs. I think I have 8 slides on FAQs. Okay. What happens to my covered period if I receive my funds after May 6th? My 8 weeks runs out, after June 30th. Your covered period is still 8 weeks. It will extend into July. Okay. So I know we've been throwing around 630 a lot. So 8 weeks are 8 weeks are 8 weeks. Okay. So take out your calendar, and if you got your money on the 6th, or if you got your money this week, okay, you still get that 8 weeks. Your 8 weeks are not truncated. Are any payments made with forgiven funds deductible? Okay, no. However, stay tuned. And if you've seen Google News, you know there's a lot of consternation out there, confusion. Well, I can usually net expenses against my gross income, and thereby reducing my taxable income. But now you're saying if I use the forgiven funds, if my funds are forgiven, can I do this? This wasn't the intent of the legislation. This is the IRS, given their opinion. Okay, we don't know what's going to happen. There is a movement in the legislature and in Congress to to make them deductible. The main thing behind this is you can't. It's the concept of double dipping. You don't want to get 2 bites at the proverbial apple. You either get the funds forgiven, and it's a outright grant of money, excuse me, and you can't get the deduction on your taxes. But stay tuned on that one. We don't have. We're hoping for further guidance. What happens if I don't use all the loan proceeds? And remember the strategy that I talked about earlier. Your balance becomes a loan at 1% payable over 2 years. Okay, so inexpensive cost of borrowing money. So to look at it that way. Okay, more FAQs. Do I have to hire everyone back by 6:30, and can I lay them off on 7/1? Yes, technically. However, the intent of the law was to keep everyone on payroll, and that will wreak havoc on your morale of your employees. So technically it's allowable. I don't know if you want to do it, okay? Can I use PPP funds to pay bonuses? Yes, you can. Be aware of the $100,000 cap, however. Okay, remember that 15,000 I talked about earlier. Okay, now, don't say, well, I'm going to give everybody a bonus for, just to use up the funds. No, that's going to get you in trouble. If your normal policies and procedures were to pay bonuses in May or June, the pundits say that yes, you can use the funds to pay bonuses, but don't use the money to use up all the funds. Okay, you'll get yourself into trouble. Okay, the auditors will be looking for that. Okay, so yes, you can use it to pay bonuses. All right. Can I use the PPP funds to buy inventory? No. That's not the intent of the PPP of the program. Okay. If owners are paid by a K-1 rather than a W-2, are those payments eligible as payroll costs? Yes, they are. There is a box on the K-1, and please talk to your accountant on this. You can. If you're not paying, if your owner, you're not taking the W-2, rather you're doing a K-1, you can do this. You can include them. However, you're still going to be subject to the $100,000. Okay, so up to $100,000 you can include. They must be wages, or what they're called guaranteed wages, and not profit distributions, or what we call draws. Okay. Are owner health premiums allowable expenses? No. Only staff health premiums are allowable. What are allowable utility expenses? Now, this is a little bit more of an expanded list of what I gave before. Telephone, okay, that's utility. Cell phones, the business portion of cell phones is includable. Gas, okay, water, electricity, internet, transportation, mileage, fuel, yes, they're includable. And for what I understand in talking to colleagues is that included that because of Schedule C folks who are self-employed. Now, internet, okay, let's say, for example, your internet in your organization, in your office, or especially now, if your employees are working from home and you're giving them either a cell phone allowance or an internet allowance, okay, those are includable. Okay. Can property taxes and insurance under a triple net lease be included? No. Okay, only the rent portion can be included. So you really have to go through the lease and reread your leases or your rental agreements and figure out what's true rent. Okay. Can temps hired through a temp agency be included? No. Okay, so for example, let's say you call Robert Half, for example, and you hire someone to answer your phones because for whatever reason, you don't issue a W-2 to them. Their temp agency issues a W-2, which is key. And you get the bill at the end of the month, and you pay, for example, Robert Half. Okay, this is considered a payment to a vendor. You cannot include that. Am I restricted in my use of leftover funds? Refer to your loan documents. Those are important to read, and then you right now use unallowable expenses. Okay, we may get relief. Who knows? Okay. Here's something. Can I include the payroll costs and the forgiveness calculation for personnel not included on the loan application? And I get this. Everybody was scrambling, to get their loan applications in. There was a lot of uncertainty. You weren't, I know some banks took a while to get their end of the process up and running. Websites crashed. Web portals were only open for 2 hours. There was a lot of pressure to get this in, and you may have forgotten to include someone. Okay, and this is if there's anybody out there in the law firm. Yes, you can include the equity partners payments. Okay, in the calculation, again, subject to the $100,000 cap. Okay. Now this question has probably come up. Well, because of circumstances, I may not be able to use all. And if you like math, saying, well, if I lower the denominator in my ratio, will my forgiveness chances increase? Yes, you can return funds. However, you have to look at your loan documents if that's allowable. And you have to have your loan documents reissued by the bank. Now, banks may not like this. Banks may not do it. So you're really you're at the mercy of the bank. But make sure if you're going to repay, okay, that you get those loan documents reissued. And another thing too is if you have other loan covenants, those things like if you have you have already money that's been borrowed, and some banks put loan covenants on you. This is an aside. You want to make sure that you keep it within your loan covenants, or work with getting an exception from those loan covenants if necessary. What's considered an FTE? Now, remember, this caused a lot of sleepless nights. What's considered an FTE, a full-time equivalent? On the application, they said head count, I believe. Yeah, they did. They said head count. So for example, if you had 2 employees working 20 hours a week, okay, head count is 2. However, if you consider 40 hours full time, they're only 1 FTE. So you see the math, the difference there. So the difference between head count and FTE. The SBA has given us guidance, 40 hours for 1 FTE, and you can either do one of the 2 things, 0.5 for your part-timers or the nearest 10th for part-time FTE. Now, so let's talk about the 40 hours. If you've been a recipient of federal grant money before, they use 30 hours. okay? And a lot of you may use the 30 hours and that's considered FTE. Well, for these purposes of the PPP, 1 FTE is 40 hours. Now, on the second part of that bullet, 0.5, you can either go with the 0.5, all right, or let's say, for example, you have someone 0.75. Now, obviously, it's not advantageous to say, oh, I'm only going to count them 0.5. 0.75, it's better for me to go to 0.8. So you have to do the math to see which way comes out better for you. For example, if you have somebody who's only a 0.2 FTE, you want to bump it up to 0.5 to get the maximum ratio. Bottom line is do the math, okay? Will severance count as a compensation for forgiveness? Yes, it will. You will not be punished for terminations, okay? And I just stuck in the voluntary or the involuntary. If you had to discipline someone, and as a result of that discipline, you had to let someone go, you will not be penalized, okay? You will not be penalized. HSA contributions, yes, they are countable. Some of you have HSAs, okay? You pay a lower premium on the insurance, on the medical or the dental or whatever, on that side of the equation, and you make HSA contributions, those are includable. However, workers' compensation is not. You cannot include workers' compensation that's not an allowable expense. Okay. What happens if an employee resigns during the covered period? Does that affect the reduction calculation? That's a yes and no. Not if you fulfill the position before 6:30. Okay. Now you're probably thinking, how am I going to fill a position during these times, right? If you are fortunate enough to fill the position and the person you make the offer to declines, you will not be penalized. So try to hire someone. And if they do say no, because we all know some people are looking at, I'm going to make more money on unemployment, so I'm not going to go back to work. Some people may do that. Okay, what you want to do is you want to document the refusal. And by document does not mean text, okay? It means get a signed letter. Make a written offer, okay? Make sure they get it, and make sure you get a response. Sorry, thanks, but no thanks. You want to have that as backup, okay? Your bank may ask for that, okay? What happens along the same lines if I offer to rehire an employee who was laid off and they refuse the offer? Will I be penalized? No. Again, document, document, document. Put it in writing and document the refusal, okay? Get them to send an email. The better thing would be to get them to send a letter. If it means you even writing the letter for them and them signing it and sending it back in, do that. You just want to make sure you get the documents, okay? What happens if I usually pay a bonus in June and decide not to pay it this year? Will the employer be penalized? No, as long as your base pay is maintained, okay? As long as your base pay. You don't want to mess around with base pay. And number 8, how much time do I have after my covered period to file my forgiveness application with the bank? Check with your bank. Some banks may not want to see you until July, okay? However, once you apply, your bank has 60 days to respond once your application is received. All right. And what documentation is necessary? Those of you who have undergone audits or reviews, this will be very familiar with you. Keep the source documents, all right? Invoices, copies of checks, and really try to keep those organized. Staple checks to invoices. I don't know, a lot of these days you don't get paper invoices. Print off those invoices. Just make sure that you get all, that you have the backup, okay? And as if you were going to be audited, okay, by you're going to have a financial statement audit. All right, and then show schedules for accruals. And what do I mean by that? Show your, your Excel spreadsheet, okay, with notes in the cells, okay, or wherever on the document. more for you to remember what did I do. Now remember, there's a lot of stress going on, and like I kid with some friends of mine, I don't remember what I had for lunch yesterday. So can you imagine, trying to remember what was going on 45 days. All right, and for those of you who can't remember what day it is today, I recommend having your schedule, doing your schedules. All right, expense tracking. Okay, looks like we're going to have some time to answer some questions. All right, a separate bank account is recommended but not required. That should be required, sorry. Not required. All right, now, does that mean I got to go to the bank? And you want to make sure that you can show and have as much proof that you're not commingling the money. Okay, now there is a trick in QuickBooks where you can, for example, and this depends on what kind of accounting system you have, that you can make a sub account of your main operating account. Okay, and it'll make your reconciliation a lot easier. So you don't want your chart of accounts exploding on you. So that's another alternative. But really, if you can establish a bank account. Now, to record the loan deposit. Now, for those of you who have received federal money or state money or local money in the past, sometimes you record it as revenue. What do you do in this case? There's no real guidance that's coming on that, we haven't heard anything. However, you just want to go back to your accounting 101, your bookkeeping 101. You do want to credit a liability, and you may just want to add notes payable PPP to your chart of accounts. Okay, so getting into some accounting, some very, very brief accounting here. You're going to credit your liability, and you're going to debit your checking account for the cash. Okay, so that's the liabilities part of it. Now, some of you have a 6/30 end, okay, year end, fiscal year end, and some of you have a 12/31. Okay, either way, you're going to want to keep track of this, because what's not forgiven and what's forgiven, unless you pay it all back, you want to keep track of that, how much you owe and that's assuming you do the accrual basis of accounting. You always want to make sure that you know how much you owe. Okay, I recommend just go ahead and record expenses as usual. And the federal government uses allowable versus unallowable expenses. Okay, so I really want to recommend you thinking about, okay, is this allowable? Is this electricity payment allowable? Yes, it's in the covered period or in the period immediately beforehand. It's allowable. The question on, can I spend this on inventory? Okay, no, you can't. Or equipment? No, you can't. Okay, so think in those two terms. Okay, now, if your accounting system has the capability of tagging transactions, and by tagging is you put it in the account, like account 1010, which is your checking account, and if you have the capability of tagging transactions, do it. Okay, QuickBooks, there's a neat workaround that you can use. One is, it really depends on which one you prefer. You can set up PPP as a customer or job, okay? And every time you make an expense or you set up an item, you can go ahead and make sure you include, you tag, that expense with that customer job. Or you can make a class that's an allowable. And that way, when you run reports and you filter them, you can go ahead and get a really cool listing on QuickBooks of everything you spend. Okay, because that's kind of backup you're going to need. All right. When the loan, and I say that with certainty, because you're going to be doing such a great job of keeping track of your allowable and unallowable expenses, and also keeping track in your accounting systems, you're going to credit loan forgiveness. Okay, for now, this is what we recommend doing, is you credit loan forgiveness revenue. Now, whether you want to include it above the line in your operations or below the line, that's a decision that you have to make in your organizations. Okay, but you're going to recognize that forgiveness revenue, and then you're going to debit your notes payable, okay, which reduces that liability. Okay. Now, whether that happens after or before after 6/30 or before 12/31 at the end of the year, you want to make sure that that you enter that correctly. Okay. All right. Next And I think I'm almost done. What's next? What you should do next? You should work with your banker on the loan app. On the loan application during that window. Keep your source documents, and if 75% of the forgiveness is going to come from payroll, you're going to have to keep very good payroll journals. Okay. Now these are the journals from your vendor, your Paylocities, your ADPs, your Paychecks, those kind of vendors. QuickBooks, if you use QuickBook payroll, depending on what kind of service you have, okay, you're going to keep good payroll records. Read the loan forgiveness application, okay? Definitely read it. It's going to warn you, you're going to be overwhelmed by it, but just take it piecemeal, okay? Maybe you want to put some soothing music in the background. Work with your accountant or your accounting firm, okay? They should be ready to handle this. And then also check the SBA website, okay? www.sba.gov. Literally, last week when I did a presentation, 1 hour before the presentation, they came out with the new rules on the necessity and the economic uncertainty. So this stuff is changing as we speak. Now, hopefully not as we speak, but this is changing quite frequently. All right. Okay, so I'm going to go ahead and stop sharing my screen.
Okay, we did have a few questions in the chat.
I was hoping, I was kind of like thinking, I was
Not too many though.
I'm just kidding.
Yeah,
So
from
let me go ahead.
Carlos.
Let me just
Okay.
go ahead. All right. So let me go ahead and open the chats. They're in the chat, right?
Yeah. Carlos has the first one if you want to scroll all the way up.
I'm going to scroll all the way up. Okay. I'm looking at Carlos. There is a black ball. Okay. No, that's not the one. Okay.
Yeah, no. It's what happens if we had an employee that went on maternity leave a week after we received the loan.
Well,
we will likely make up the payroll by paying others to pick up her hours, but her pay will drop more than 25%.
Okay, if you're going to make up the hours, oh, that's by employee. Oh, I see what you mean. So if I understand, and this is kind of like a similar situation in the family operation, where you let people go and the family kicked in and up their hours, there possibly is going to be a reduction. Yeah. And the maternity, and you're not paying on the maternity leave. There's no sick time or anything that can be used for that period. Okay, what I would recommend is use as much sick time as you can to minimize the impact of the salary reduction. Okay.
Let's see. He said he offered to pay, but she applied for disability.
Offered to pay, but she applied for disability. This is one of those cases when I think they didn't think about it. I think we're going to have to watch out for guidance on that, and then also work for your bank. That's a sticky wicket. That's one of those tricky transactions I hadn't even thought about. Sorry, I don't have the answer for you.
Okay, we have something from Shanu. What about federal income tax? What about NNN on rent?
Okay, federal income tax. No. Okay, I'm assuming this is what you pay in taxes, or what you would. Okay, so I'm going to assume if it's what you withhold from someone's paycheck, that's paid by the employee. That's no game. You can't cover that. Okay, on your income taxes, on your companies, which way you're structured, no, that's not includable. NNN, triple net lease on rent. Again, I'm assuming that you're talking about only the rent portion. So you'll have to, and you may have to work with the with your landlord to get to the rent only portion. That's the only part that's allowable. You can't include your portion of their property taxes. You cannot include your portion of their insurance. It has to be the pure rent.
Hey, Roger mentioned that he got a $2,026,000 loan. He doesn't think he's going to get audited.
Well, okay, you're right. You're right on the cusp there.
Yeah.
Can you imagine $2,000,001? I mean, that would be really, really bad. No, I mean, look at it as a low risk, high risk type of thing. Okay. Now, this is my opinion. Okay, this is not legal opinion. This is not any. This is just me. If you follow the rules, okay, and everything else, okay, and given that they're human resource power, are you going to be on their radar? Probably not. Okay. All right. However, if they say, and this is for any audit, okay, if the auditors find something in an area, it's kind of like peeling the onion, or if you imagine if you have a loose string on a sweater, once they start pulling on the thread, or once they start peeling the onion, you don't want to give them an excuse to do that. Okay, so you just want to make sure you're extra careful on following the rules. Okay, and if you do get audited on the 20 because of the extra 26,000, do not buy a lottery ticket.
People are asking if this slide package will be available.
Yeah, I can make it available. That's fine.
Okay, great.
Make it available.
See, if I choose to keep some of the loan as liquid, not having rehired all employees, can a portion of the loan still be forgiven based on the payroll I have paid?
Okay, let's start with the covered period. Once the covered period ends, not forgivable. Okay, it goes into the unforgivable but allowable bucket. Okay, so that's why you want to maximize legally during the 8-week covered period. And I showed you one way that there's a loophole that's in there, okay, that you may be able to, if it doesn't get shut, or I'm sure it's on their radar, okay, you may be able to take advantage of that. So really do everything you can before the last day of your 8 weeks.
Okay, is the
or
forgiveness
the alternative
application
covered period.
Oh, sorry. Is the forgiveness application available?
Yes, it is. It is available. You can Google it. Pauline, I can send it to you as part of the slides.
Yeah, I think I actually have one from Bahar earlier in the day.
Okay.
For FTE, if we redistributed hours but have less employees covering the same number of hours, is that okay? Or do we need to bring in more bodies?
Okay. Do you need to bring in more bodies? Say the question again.
For FTE, if we redistributed hours but have less employees covering same number of hours, is that okay? Or do we need to bring in more bodies?
And this is the confusing part. If you go back to your application, there was head count. Head count equal bodies, right? Okay. They're not asked, well, on the application, they're asking you that question, but we don't know what they're going to do with that because they're not basing anything on it. What they're looking for now is FTE. So your FTE can, you can by doing one of these on one employee and doing one of these, as long as you still have the same amount of FTE, you're fine. Okay.
Okay. There's a clarification requested for payroll. For forgiveness, if we run our business on a cash accounting basis, is our payroll looked at as when paid?
Well, okay, so you'll have to excuse me, I teach accounting, okay? So, and if I get too technical, someone give me this, okay? Time out, okay? What we're looking at is, I'm not an advocate of the cash basis of accounting because you can never tell how much you owe and how much owed to you. But in this case, a cash basis, it's you just happen to align very well. When it's paid, it's paid. All right. So you're in a good situation. All right, so let's say, for example, and it depends on if you're a monthly or a semi-monthly, or if you're a weekly or a bi-weekly. That's the first question to ask yourself. Then the next question to ask yourself is, okay, all right, cash is the best way to go, because that's when the money goes out, that's when it's incurred, and that's when it's paid. So you're actually in an advantageous position. Did I answer the question, hopefully?
Hopefully. He says yes.
Okay, good.
Okay, here's another one. Our church got the loan as well. The pastor is, it just jumped on me. The pastor is 3/4 time and the admin is 12 hours per week.
Okay.
Music director is 5 to 6 hours per week. And the projectionist is 1.5 hours per week. Is that a do your math thing?
Okay, I'm also a former math teacher. Okay, I used to teach math, high school math, and I just need to do a shameless plug here. It's, if any of you asked that your algebra teachers or your math teachers, will we ever use this again? This is your answer. Yes, you will. So I have to do a shameless plug for teachers. We don't, anyway. Yes, you have to do your math. Just make sure your FTEs are the same. So you do all your decimal additions and keep your FTEs the same. Yes, that's where you do your math. Okay.
Okay, if an employee is rehired at the end of the 8-week period, but they do not have the same hours they did prior to closure, therefore less payroll, does that work if the FTEs are accurate, but payroll doesn't match prior to shutdown?
Okay, remember it's, okay, so you are given a little wiggle room, so to speak, and that wiggle room is a technical accounting term that we use. Just kidding. Remember, it's additive. You have you have on one hand the FTEs and then the salary reduction. So as long as that for that individual employee, you didn't reduce their salaries more than 25%, you've got that wiggle room. So it's additive together. Okay.
Okay, from Kelly, there has been some back and forth with the amount qualified in PPP if you have independent contractors, the 1099s. Within the application, it asks for 1099s. Why would they ask for that if they could not be paid under the PPP payroll amount?
I'm going to give you a very scientific answer. We don't know why. We don't. I would have loved to be a fly on the wall when they put this together, but my head probably would have exploded. But that's beside the point. That's editorial comment. I don't know. You ask a very, very good question. Why? And we don't know why. And we may never know why. But it's one of those questions that I'd like to know the answer to. I'm with you on that.
What is your opinion about the possibility of the 8 weeks getting extended? I have seen some reports to that effect.
I have heard the same thing. Okay, and it's basically because of restaurants. Okay, because I mean, for some people, for some businesses, you can ramp up right away. But for restaurants, if your volume is not there, you're not going to hire people. And I get that. That's a very sound business decision. They're all rumors right now. Okay. Now, I would check the SBA site. Okay. There's FAQs. I think the last one was question 41. I got to go back and check. Okay. Check the SBA. And then also, here's another thing, check Google. Okay. I'm not putting a plug in for Google, but, Google it and see what they say, because then you'll get, the news is usually delayed by a day. Okay. But there may be some information there. Who knows what they're going to do? Who knows? I would like to see that happen, because then that'll allow people to breathe a sigh of relief in a lot of cases. Okay,
that wraps up all the questions. And I think we've hit our time limit, 3:01.
Whoa.
Excellent job. Thank you so much for this.
Well, it's, we're all in this together. And if you need to reach me, you can always reach me through Pauline. And on behalf of De La Torre Associates, thank you very much for allowing me to do this for everyone. So it's an honor.
Great. And I'll get this light package sent out and the replay link once we get it all posted.
Right.
Thank you so much, everyone. And
You're very welcome, and
Enrico.
enjoy the rest. Have a great Memorial Day, everyone.
Yeah, Delatory rocks. I like that one. All right, take care. So if you
Take
want to
care.
shut down the
Bye-bye.
recording and then send it
Do
to
I
me.
stop it?
Yes, it's all in your power.
Oh boy. Okay. I can't. Okay. Stop recording. There you go.
Thank you.